Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday the 15th of May. Starting off with the FTSE 100, which is in a range between around 86.30.40 and 8500. There's the 50-day line there, 84.70 is potential support. If we do break down as we have retreated somewhat today. Otherwise, through 86.40, looking for the old March resistance there, 87.40 by the end of this month. Moving on to the DAX, and here market actually went up to new highs, which is amazing after the Trump tariff rug pull, but we're currently near the old resistance there from March, and the longer we stay above 23,500, the greater the chance of a move towards 24,200 on top of that rising trend channel from the end of March last year. Worst case at the moment, seen as being the top of the old gap there, the turn of the month gap, 22,800. Dow is next, and here you can see that we've got this market dancing around the 200-day line, also dancing around the floor of that rising trend channel, which was there before the tariff rug pull, and want to really stay above the 42,000 level within that channel, to then give this market a chance of heading higher and making the progress that we were hoping it would make before the problems were delivered at the beginning of last month. But at the moment, the obvious support there, the 50-day line, 40,900. If we break through on the upside, then we need to break that old March resistance, 42,700, to then retest the best levels of the year. But at the moment, looking a little bit sheepish near that 200-day line. Moving on to Bitcoin, and here it's been all about the 100,000 area and holding above it. It's slightly disappointing that we didn't get nearer to the 109 record levels. That rather delays our upside of 120,000, the potential upside by the end of this month. Now, obviously, it looks as though we won't make it, but things can change. In terms of support, the obvious area is the initial May resistance at 98,000, and that will hopefully cap or stem any losses. The other point to note is the way that the 50 and 200-day moving averages are both rising. They're about a week or two away from a golden cross. The run up to a golden cross is normally the strongest part of the cycle. Next up is gold, where we are sort of fearing that there's a top in place, but hoping obviously that there isn't one. Here you can see though that while, and as we previously said, while we're above 3,200, still within that rising trend channel from the beginning of March and on for a 3,800 target, that would either be seen at the, well, probably now the end of next month rather than the end of this month. There was a chance we could get up to there by the end of this month, but especially while we're above 3,200. In terms of the downside, if we do break 3,200, the obvious area would be the 50-day line there at 31.43. You can see the last time we tested the support, we actually bounced above the 50-day line when obviously this market was very, very strong indeed. Moving on to the stocks, and starting off with Aptamer, which delighted the market with not one but two RNSs. They could have put everything in one, but obviously money's no object. As far as the current charting position is concerned, we're in a broadening triangle there. Top of the triangle from December up to 1.5 rather, and we're looking for that by the end of next month or even sooner, while we remain above the 50 and 200-day moving averages there at 0.3. RSI rebound above neutral 50, so it does look as though the shares are in a good place technically at the moment. Stock which I interviewed a couple of months ago and has finally pushed higher. You see that we're in a rising trend channel there for Borders and Southern, and top of the channel there, around 8.7 pence. Looking for that by the end of this month, while we remain above the old February resistance around 6.25 pence. Potential sale news in the air for Bluebird has slightly livened the price here. We've gapped through the 200-day line. Top of the recent range around 106, but really any substantial news on a sale, probably one would be looking and anticipating the shares be back to where they were back in June last year at 1.8 pence plus. Upside value while we hold above the now rising 50-day line at 0.58. And you can also see there have been 3 RSI bounces off the neutral 50 level, which is normally a decent leading indicator on the upside. Speaking of upsides, you can see that Conroy Gold's had a decent day today so far with funding news. Initial target here, the 200-day line at 4.15. Best case, maybe by the end of next month, up to the 6.55 pence level. I think if you look at today's news, there was funding of £250,000 and unsecured, and also, if you look at that, you can see the conversion price of 10 pence a share, which is a healthy premium on where the shares are at the moment. Only back below recent resistance at 3 pence on an end-of-day close basis really says that this is a flash in the pan situation. Moving on to one of the market's more favourite situations at the moment, Catenai. Here you can see the shares are enjoying the aftermath of the Illudium news that they had today. And back above one of our previous targets there at 0.45. Above that, we're still looking for the shares to retest the best levels, 0.8 pence, probably now by the end of next month. But you can see the news today on Illudium taken well by the market. Moving along to another of the recent big rises, recovery situations, back from the dead situations, and it's Capai, rising trend channel here for the channel above the 50-day moving average at 0.27, and while we're above that, looking for 0.65 as a best case scenario target by the end of next month. Stock which I don't think anyone's looking at the moment is Corpus Resources. The reason for looking at it now is the way that we're near the lows, and we've had a sideways shuffle above a rising 50-day moving average, followed by the break higher today. View at the moment is that while we're above the floor of the rising trend channel based at 0.015, looking for up to 0.03 by the end of next month, or even sooner than that. Electric guitars next did actually give us what we wanted a couple of weeks ago. End of day close above the old April support there, 0.05, gave us a retest of the April resistance, but we went a bit higher than that. But now bouncing off that early April support again, 0.05, that looks as though it's the floor of the range rather, and we'll head back to 0.1 pence in coming days and weeks. On to gear for music, which is not quite, well, don't normally look at this sort of kind of thing, but we have had that bear trap iron reversal, so gapping down in April and then gapping up, and we've also broken the downtrend channel. The view here is an end of day close above the 200-day line at 158, could take us back to the highs of the last August at £2 by the end of next month. Ideally, we stay on the right side of £1.40 in the meantime. On to one of the greatest winners of the year so far, which is Metals One, and called here from 2 pence. It's now what's up, nearly 10x now, actually, which is quite exciting. If you like that kind of thing, current situation has been a rising trend channel, top of the channel there, up to 53 pence. And that's valid while we hold above recent resistance at 35 pence. I suppose ideally we stay above the floor of the channel at 38, but let's see how we do. Very volatile for the smarter web, and very interesting charting situation. Obviously we didn't have much charting to go on, but the shares did hit our 33 pence target when they were at 15. And current situation, only for the brave obviously, is to assume that we'll hold yesterday's support there at 19.5, and above that we are in a channel heading up to 65 pence, maybe by the end of next month. If we want a momentum trade, it would be an end of day close above the current high of the day, 30.5 pence. So I think that maps everything out. Ideally, we stay above the notional floor of that rising trend channel at 25 pence, but it's a punchy call to say that that will not be tested or broken. So 25 to 65 the channel, and the stop loss around 19 pence yesterday's support. On to the last two. First one is Serco, and here you can see that we've got this wide rising trend channel. Shares have broken back and closed that gap there from back in November above the initial May resistance of 180, which is 85 pence away, looking for the top of the channel as high as £2.12 by the end of next month, or even sooner. Finishing off with Zenith, and here you can see that it's a bit like the borders chart actually. We've got wide rising trend channel, lots of consolidation since the end of January, but it looks like we've finally broken out, breaking that line of resistance there from the end of January at 8 3/4, and also bouncing off the floor of the rising trend channel. We've got the 50 and 200-day lines both rising, so above 8 3/4, looking for the top of that rising trend channel from the turn of the year as high as 17 pence by the end of next month, or even sooner. The other point to note is that we've had an RSI rebound at neutral 50, so looking quite encouraging there on Zenith. That's it for me today. More updates tomorrow.